The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you very much for being with me today. And I'm delighted to have your company. It's good morning to our friends on the east coast of Australia. Good afternoon to our friends across the ditch in the land of the long white cloud, which is having a bad time, apparently. The government's got a lot to do after another socialist experiment with the previous administration. Okay, so let's see if everyone can hear me all right. This Anthony D is the first one in from Chicago. Anthony used to be a broker. He's now a private trader. Delighted to have you with us. And David's with us. Thank you, David. Good to have you here, my friend. And I hope you're feeling well. Okay, so you can all hear me all right. That's wonderful. And let's see, we've got a whole lot of stuff to tell you today, folks. But let's have a look quickly at who's here. Vito's with us. That's a new one. Vicky, of course. Lovely to have you with us, Vicky. Sean down in Adelaide. Rudolph, there's a name from the past. We haven't heard from you for a long time, Rudolph. I'm glad to have you with us. I hope you're well. Rolf, the same. He's a very long time Danielcode member down in Melbourne. Rob H. from New Zealand, from Auckland. He's a wonderful analyst, market analyst and trader. He's a man of deep insights, Rob. Glad to have you with us. Peter, of course, well done. Pietro here is actually. Good to have you with us. Many Peters. Peter Mack, who's not a day trader. Let's see, we move along a bit here. They're all rolling off here. We got Nathan. Nathan, wonderful to have you with us. Thank you, my friend. Miles, of course, we haven't seen you for a while. You're back with us. Mark L, of course, our perennial champion. Would not be a party without Mark L. He never misses. He's a wonderful trader, and you'll hear more about that as we go along today. Marcel, Dr. Marcel up in Quebec. He's a tutorial guy, very long time Danielcode member. Wonderful to have you today, Marcel. Thank you. Justin from down in the Hunter Valley. For the rest of you folks, the Hunter Valley is in the state of New South Wales. It's south of where I am, and it's the most beautiful country you can possibly imagine. It's the closest equivalent, I guess, for you in the States would be Keeneland. It's where most of the really big horse studs are. And Justin is going to form an important part of today's webinar. So I'm so glad you're with us, Justin. Greg Palladini is with us. Greg, I missed you last time. Glad to have you with us. Greg, the other Greg, they're both money managers, and Greg Palladini's in California. The other Greg is in either Colorado Springs, where his business is based, or Texas, where he lives. I'm sure he works that out somehow or other. David's with us. He's just in the process of doing a tutorial. I hope your recovery's gone all the way along, David, and you're feeling good. Bob Parry, haven't heard from you for ages, my friend. So glad to have you with us. Anthony, of course, Adrian, Peters, lots of Davids, all here. Wonderful. Okay. Lots to talk about today and some very, very important stuff. So let's get started as we go along here. And as you know, markets are rational, orderly, and sometimes predictable. If you follow the Danielcode webinars, I show you a whole lot of that. And as I say, the Danielcode is a set of proprietary ratios that control time and price in all markets, and that's a sort of a motherhood type statement. But I'm going to show you some detail of that today, which I expect will astonish you. And the background to all of this is that creating and trading Danielcode time signals is the best trading system I know of, have ever heard of, or ever seen. And it's only available at the Danielcode tutorials. You'll learn all about trading price at the Danielcode website, but if you want to learn to trade time, it comes through the Danielcode tutorial. This is a new page we put up on the website. If any of you would like to have a chat about your trading, your dreams and aspirations, your fears, your worries, whatever, I'm more than happy to have a conversation with you. Just send me an email. Let me know what time zone you're in so we can work out a time, and I will set up a chance, an opportunity for us to chat about anything you wish. So you want to be a trader. You're not going to have time to click all these links at once, but there's a new one added at the end, and you'll see that these are all listed on the front page of the Danielcode website, www.thedanielcode.com. So you can go to that website anytime and click on these links. And they're selected links, and I think they're terribly important because it's one thing for me to tell you how great the Danielcode is, and as everyone does, most of that is puffery or spin. But if you really want to know how good a trading system is, ask the people who are doing it. In other words, ask the students. And what we've got here is 4 selected interviews that I've done with 3 of our guys who are now super traders. The first one on this list is with Mark L., who's with us today now. Mark did his tutorial back in about 2016, 2017. And he's giving this interview at 2024. So you can see that he's had a long time to see how this has gone and if it's managed to endure and how he feels about Danielcode. And it's about a 20-minute interview that he did with me. And I really, really recommend that you watch it. For that particular project that we talk about, Mark returned about 1,000% on margin in 1 year in natural gas. Pretty fantastic stuff. In fact, extraordinary stuff. And as I say, he's had 7 years to think about those results and still says that he's getting similar results with his real money trading today. The next one is from a couple in I was going to say Colorado Springs, in Boulder, Colorado, a bit north of Colorado Springs, of course, and that's Amy and Scott, and that's a particularly interesting interview because Amy had never seen a financial chart in her life when she came to do her Danielcode tutorial. And Scott had done a bit of trading many years ago, but nothing along the lines of the Danielcode. And as they were finishing up their Danielcode tutorial, they were returning 500% in wheat for 10 months. Similar sorts of numbers in other markets. Pretty wonderful stuff. And then the third one is Justin, who's with us today. And Justin went through a bit of an epiphany. He first exposure to the Danielcode, he didn't like it at all because it had some overtones of some psalms in it, and he thought, as many people do, anything religious, let me get away from this. I want nothing to do with it. But his father, Hank, persevered and said, Justin, I've seen Needham's trading, keep at it, keep at it. And it took a long time. It took a long period of years, probably 6 or 7 years. Justin, a very busy young man. He was newly married at some stage not so long ago. He had a new baby, similarly, not so long ago, perhaps another one on the way. And he's a professional photographer, and he travels around the country quite a bit. So he kept returning the Danielcode and returning to the Danielcode, and eventually it clicked. And I can't tell you how many conversations and tutorial meetings we had, but it was a large, large number. And once it clicked, he's become an absolute virtuoso. He's a man on fire. And then he came back very kindly for video number 4 interview, which you can see in the webinar 2 weeks ago. Buy, Sell or Panic, I think it was called. I think it's that one. And what Justin had done for us, he'd gone through some massive research on 7 or 8 futures markets over different years, and usually 2 years in each of those pieces of analysis. And it's extraordinary. And what actually came out of that I found so interesting, and I'm sure all of you will, as he said, he's actually paper traded hundreds of markets. He's a machine, and he never found a losing year with Danielcode. I think that's a big statement, and I think subconsciously Justin would probably try to find the breaking point for the Danielcode. When would it stop working? Where would it stop working? And the wonderful answer is it didn't, and it doesn't. It just keeps on. It endures, and that's a part of the great miracle of Danielcode. So here's Justin's journey. As I say, initially he shied away from it a bit, had religious overtones, couldn't possibly be legit, how cynical, etc., etc. It's really interesting. When I first released the Danielcode, Justin, I was getting literally 40 and 50 hate emails every day. It was extraordinary. If you really want to upset people, say the word Bible. If you want to upset them more, say God. And then if you really want to bring catastrophe on your head, say Jesus. People get so emotional about some of these things in life. And there's really no reason to, because as you'll see, although the book of Daniel in the Old Testament is the basis of Danielcode, what I'm going to show you today is actually not a scripture lesson. We don't do those here. We're traders. It's a lesson in mathematics. And this is pure math. And I'm happy. I'm more than happy. I'm thrilled that Justin's dad, Hank, is a wonderful man and was a member of the Danielcode himself. He put Justin to persevere. And he said, I've seen Needham, some of Needham's trading. You've got to stick at this. And he did. And now he's getting the rewards. He's become the newest of the Danielcode super traders, which is quite wonderful. Okay, so this is today about time. There's nothing like the Danielcode out there, I promise you. There's certainly no program that delivers anything like the results that the Danielcode delivers. And that's why Danielcode clients are so successful. There's no anxiety or stress. We have some people with us today. Mark L's a shining example, who are very nervous traders. And I can remember saying to Mark, you're an engineer, my friend. You should be stoic and stable and grounded. And he was in all things except trading, where he was very, very nervous. So we worked out a method for him to do his trading, which is part of the way the Danielcode is designed. And that is, once you understand how to trade Danielcode, it's going to take you less than 20 minutes a day to put your orders on and then go away. You don't have to sit there watching the screen. I mean, I designed the Danielcode essentially for myself, and some of the things I wanted. I was living in New Zealand at the time, a wonderful, wonderful country. I often say New Zealand's like Australia used to be 20 years ago, and that manages to offend everyone, Australians and Kiwis alike. But the time we were over there, I've got to say, we went for 3 months and we finished up staying for 13 years. That's how wonderful it was. Wonderful, wonderful place, wonderful people. So Mark's anxiety, we got to the stage, as I say, I'm designing this myself. I'd had years of sitting up watching charts in the middle of the night because I was on that New Zealand time zone. And I didn't want to be doing that again. And I didn't see that as sustainable. So the Danielcode is designed on daily bars. And what that means essentially is once you've create your signals every day, place your orders, that's it. Go away. Do something else. Don't sit there looking at the charts. And we all think we're individuals, but we've all got a bit of a Pavlov dog about us. If you see that chart moving, I know I'm the same. Boy, the temptation is you've got to do something. You've got to react to it. Cause and effect, cause and effect. But the way we worked it out for Mark is he puts his orders on, and he's got a separate trading room. He doesn't go there again. That's it. The orders are on. He'll look at them at the end of the day. It's a wonderful way to trade. 20 minutes a day. That's it. So what we're going to actually be working with today is mathematics and numbers. And I know a lot of you say, oh, numbers, I don't like numbers. You should like numbers. You should love numbers because they're the universal language, probably the only universal language. These days, we seem to find it terribly hard to agree on much at all. There seem to be arguments between anyone you can think of. We've got demonstrations going on in US schools. Some of it's washed into Australia. We've got young men stabbing people. I mean, it's absolutely revolting. But that's where we've got to, and that fringe element is causing enormous damage to our society everywhere. And as I say, it's very hard to agree on much of anything. However, the one thing that everyone in the world agrees on is math. 2 and 2 equals 4 in any language, in any tradition, in any religion, in any culture. 2 and 2 equals 4. So that's important. I call it God's language. You can call it pure math. It doesn't really matter. It's exact and it works. And that's the basis of the Daniel Code. But don't panic. You're not going to have to do any math. I'm going to do it all for you. So the genesis of the Daniel Code, which I believe is the safest and most profitable trading system ever seen. It works on all markets in all time frames. And I've shown you those video links on the Daniel Code homepage. I'd like you to go through them yourself and get an understanding of just how extraordinarily profitable this trading program is, and how diverse has been the work that our clients, our students at the time have done, and how generous they've been in sharing those results with us and their journey in effect. And a lot of that stuff now has come from Justin, who is, as I say, just he's a man on fire with love and passion of trading. Now that he's got it, he'll have it forever. You do it once, you've got it forever. You learn it properly. So the Daniel Code is a series of numbers, and they're derived from time as revealed to me in Daniel chapter 12. Is that a revelation? Was to me. I can tell you I was passionate about trading. I still am passionate about trading. But my trading was win a few, lose a few, win a few, lose a few. Most of you will have that familiar feeling. And I was desperate for something to take me out of that rut, if you like, and take me to a total new level. And I got that. And that's what the Daniel Code's about. And it took years and years and years. It's not something that was a flash in the pan. But my main interest in those days, I was actually started off as a Forex trader. And then I moved into futures mainly. But Daniel Code works on all markets. It works on stocks. It works on anything you can think of. You'll see these same ratios all the time. Some of you were with us when I did a series of presentations in the States, excuse me, some years ago, and this was the one at Los Angeles, and one of the young men there, when we were going through the Daniel Code, halfway through the first session, he jumped up and ran out the door. Lovely young man. And when we were having a drink after the teaching session was over, as we do with tutorials, I said to him, "Are you ill? You're not feeling well?" He said, "Well, no, I'm fine. Why?" I said, "Well, you jumped up in the middle of the tutorial and just ran out the door." He said, "I was so excited." He works at NASA Jet Laboratories, and he's an analyst. And he said, "The minute you said 59.3, that went straight to my heart, because 59.3 is the number of the human genome, the rotation, spinning set of pictures you see of the human DNA. That's all based on 59.33%, which of course is the second number in the Danielcode sequence. It's times plural. Right, so what we get is that Daniel, this is 2,600 years ago, 2550 to 2,600 years ago. Daniel, who's a known historic figure, is having a vision. And in this vision, he sees an entity that has the appearance as of a man. And he describes him as the man dressed in linen who was upon the water. So, a couple of unusual things about that. Back in the day, minus 2,500 years, linen was so expensive to produce that it was quite literally only worn and reserved for the ruling party, the ruling family. So that tells us that this entity that is talking to Daniel in chapter 12 is an entity of very, very high status. And the other thing is that while he appears and has the appearance as of a man, he is standing upon the waters of the river, which is pretty unusual, isn't it? So he then provides us with these numbers. Now, millions, no doubt billions of people have read this same document, but I got a special twist out of it, which no one else has. And it is so precise, it is so perfect, it is extraordinary, and no one is more amazed by all of this than I am. Every day I'm amazed, and I hope you will be too. So this is the extract from chapter 12 of the book of Daniel. And I've just highlighted the important parts here. In verse 5, he says he's having this vision. He looked, and there stood another two had arrived. He already had seen the man clothed in linen, which was upon the waters of the river. That came earlier, but then in verse 12, he looked, and there stood another two of these entities, one on this side of the bank of the river, and the other on that side of the bank of the river, presumably standing upon the waters of the river, as was the man clothed in linen, who's the central character. And we get to verse 7, and he says he heard the man clothed in linen. He was answering a question from one of the new arrivals. How long shall it be to the end of these wonders? We know he's talking about time. How long shall it be? That's time. And he's looking for an ending. How long shall it be to the end of these wonders? And he says he heard the man clothed in linen held up his right hand and his left hand unto heaven, and swear by him that liveth for ever, that it shall be for a time, times and a half. Not it may be, not it might be, not thereabouts. It's very exact. And the word shall has always had elements of the imperator about it. It's a definitive statement. It's going to happen, and it happens exactly this way. Not near it, not we'll count it a different way. It's exact and it's precise. And then he gives the 2 dates. And because I was very interested in numbers, being an attorney, I understood better than most that words have many meanings. If you don't believe that, try and get a case heard in the contracts court anywhere in the world. At the moment, in Australia, you'll be waiting for 2 or 3 years to get a contract case up in the civil jurisdiction. And that's simply because so many people who've entered into contracts where they've given great consideration to the words, where they've often enough had lawyers giving that same consideration to the words, come the crunch, it's obvious that they have different understandings of those words. So for that reason, I wasn't interested in words. What I'm interested in is numbers, because numbers are precise, exact, and cannot be refuted. As I say, that's the only thing possibly these days that the whole world agrees on is basic mathematics. And we get two numbers. There will be 1,290 days to the abomination. It's a nasty thing. And then in the very next verse 12, chapter 12, verse 12, it gives us blessed time 1,305 and 30 days, 1,335 days. So this is the St. James version of the Bible, folks, that a wonderful gentleman in New Zealand gave me many years ago now. But you can read the same thing in different versions of the Bible. It says exactly the same thing. So those are time cycles, and Daniel gives us that time in days. He says literally it's so many days. And that's what he's told by the main entity in all of this event that's happening to him. So what is a day? A day is literally one complete rotation of the Earth around its own axis. That is 360 degrees. The Earth spins around its own axis in a circle, which is 360 degrees. Now, we can count time in days, weeks, maybe hours, all sorts of different ways. But one of the ways we can count time is in degrees, because the Earth is literally going through 360 degrees to create each day. And we know that a longitude is measured in degrees, minutes, and seconds. And longitude is quite literally, folks, the difference in time between a known spot, which is called the universal meridian. It used to be called Greenwich Mean Time. Greenwich is the home of the Royal Observatory in London, England. But because the French can't bear to say anything nice about the English, they got the European Union to make sure they called it the mean meridian. Excuse me. And that's what it's called, the Grand Meridian or the Mean Meridian. It is actually Greenwich Mean Time, is where it came from. And of course, it was actually the British who discovered longitude, mainly by the needs or responding to the needs of their sailors. You can pretty well know where you are most of the time on land. You can either look around and see what's there, or you can find a map. But when you're out in the ocean and there's nothing to see but the sea, the only way you can locate yourself is with longitude and latitude. And every hour of difference of local time, every single hour of difference from your time to the prime meridian, Greenwich Mean Time, is 15 degrees of longitude. In other words, 360 degrees divided by 24 hours. So every hour is 15 degrees change of longitude. And after 24 hours, you've got 360 degrees or a circle. So the next slide is going to lay out for you almost all the Danielcode numbers and ratios. These are time cycles, but time and price are the same thing on different axes with the Danielcode. If you're interested in using these numbers, go right ahead. If you are using them to go to third parties, please note that I claim the copyright to this document. So here you are, folks. This is it. Let me find a tool and I can take you through this. And here we are. So at the top here, we've got this statement, time, times, and a half. And you'll recall that that's what the prime entity said to Daniel. In fact, he did more than say it. He raised his left hand and his right hand unto heaven, and swear by him that liveth forever, that it shall be for time, times, and a half. And that's actually the sequence. He's telling us the sequence in which time moves. It moves as time, times, and a half. And we next go to the two numbers we got from that same document, where blessed time is expressed as 1,335 days, and the time to the abomination is 1,290 days. And if we do the simple stuff, and I should tell you, None of this stuff is simple until you get to the end of it. This took me 6 or 7 years, pretty much full-time work, and endless, huge, massive spreadsheets all stuck together with sticky tape. They're so big you couldn't open it on a desk. You had to open it in the sitting room floor. But this is what it finished up as. We finished up that the difference between the two time cycles that he gives us, if that's what they are, is 45 days. Now, we can substitute the word degrees for days because we know that it's a measurement of time. And the beauty about time, like money, is it's fungible. In other words, you can take your $100 down to the bank and deposit it. They'll say thank you very much. And you can go back a week later and say, I'd like my $100 back, please. And they'll give you your money. But they won't give you exactly that $100 bill. If it's a $100 bill, it will be a different $100 bill. Or they may give you 250s, or they may give you 520s, or even 1010s, whatever you've asked for. The point is they're different in appearance and they're different in fact. They're not the same particular bill, but because money is fungible, they are essentially the same thing. What you deposited was a note that gave you the purchasing power of $100. And what they're giving you back are notes, singular or plural, that are giving you purchasing power of $100. So we change the word days to degrees. All of a sudden, what pops up is 45 degrees, and we love that because we know what 45 degrees is. 45 degrees is 1/8 of a circle, and this is where the rule of eighths come from. And back before we went to decimalisation, all stocks were quoted in 16ths and eighths, and some of them still are today. If you have a look at grain, soybean and wheat, or US T-bonds, you'll see that they are still quoted using the rule of eighths. Beans and wheat use 2/8 as a tick. T-bonds uses 1/32 of a point as a tick, and that's 4 times 8. In other words, 4 eighths give you 32. Which becomes the tick value for T-bonds. So there is the rule of eighths that you've discovered directly from the book of Daniel. Now, it's been used, and as I say, in markets forever, still is. And lots of people have talked about the rule of eighths. But nobody's ever said they knew where it came from. Now you do. You have discovered the rule of eighths, and there it is in all its glory. And then let's move down to where the word says time. We've discovered the rule of eighths. We're really excited about that, but we want more. It's taken me years and years and years to do these massive spreadsheets. And one of the simple things we can do is we can take blessed time, which is 1335 days. So that's a lot more attractive, isn't it, than the time of the abomination. And we can divide it by 45, the third number. So Daniel gave us the first number and the second number, and between the two of them they created a third number. And there are all sorts of things we can do with these numbers. I'm just giving you the most basic of them. But one of the things we can do is we can take blessed time and we can divide it by 45. And what you get is 29.6 days. And I've got that in block and a big fat line around it, because that is what we call time. 29.6 days is Danielcode time. It's not the only measure of time. There are many measures of time, but it's the Danielcode measure of the basis of time. And that becomes really important at that stage, because I've been churning out these massive, endless numbers, and I always knew that somewhere I had to see something that gave me recognition, something that could verify the veracity of what I was doing. And I was fortunate because I was working on lunar cycles at the time as well, which I was very interested in. And immediately I saw 29.6. I realized that that is the length of a synodic month. And a synodic month is the most basic measurement of our planet. What it is, in fact, is that the moon is rotating around the Earth, and the Earth and the moon are rotating around the sun, and periodically they line up, and you will have the moon and the sun on the same side of the Earth, and at other times you will have the sun on one side of the Earth and the moon on the other side of the Earth. And when the moon and sun are on the same side of the Earth in their rotation, that is when they start measuring a synodic month, and it measures the period of time that it goes through its various rotations and returns to that exact position. And that's super important because the length of a synodic month, if you care to look up Wikipedia or Encyclopedia Britannica or whatever, you'll see that the length of a synodic month is an average of 29.5 days. That's 1/10 of 1% away from our understanding of time, which is 29.6 days. But when you look into it a bit further, you'll see that NASA Jet Laboratories again did an analysis of each of the times of the 12 synodic months in a year, and they did that for the year 2011. And what they found is that the synodic months, the 12 of them inside that year, varied from 29.3 to 29.8 days. So any number between 29.3 and 29.8 days is accurate as a synodic month. And that was very important. So we took that 29.6 and we went across to the section you can see that says DC ratios. This is them running down here. And the first thing we did is put in 29.6 and call it time. We then looked at the instruction that the entity had given, where he swear by him that liveth forever, that it shall be for a time times and a half, and we simply did the math. We added a half. If 29.6 is time, then 14.8 must be a half. These are all ratios in days. And you see where it says time times and a half, it doesn't just say times once, times is a plural. So what are the various combinations? To catch all of them, you would need time, time and a half, then times plural, then times plural and a half, then 3 times, etc., etc. And you can see that's exactly what's laid out down there. Now, reverting to our rule of eighths for a moment, there are 2 numbers in the rule of eighths that have become terribly important. 3/8 and 5/8, 37.5 and 62.5. And I've included them in that list of Danielcode time ratios. And the reason for that has nothing to do with the establishment of the other numbers. That is an accident of modern history. And essentially, it's the success that Bob Prechter's had with his Elliott wave theory, which for the last 42 years, anyone who wanted to have a Section 7 license to work in the industry needed to pass the exam, a part of which was Elliott wave theory. We have been forcing countless numbers of bright young men over the years to learn Elliott wave theory, which holds, for some totally unexplained reason, that markets move in accordance with the Fibonacci ratios. And 2 of the Fibonacci ratios are very close to 2 of the numbers in the rule of eighths, 61.8 and 38.2. And because we have been forcing all of the market makers to learn Fibonacci cycles as part of their Elliott wave theory, what happens when the market makers are not sure what to do with the market, they'll try and park it near one of the Fibonacci numbers. And it doesn't actually go there. It will slip through one way or the other. It'll either be the 59.3, which is Danielcode times plural, or it will be 62.5, which is from the rule of eighths. Similarly with the 37.5 and the 38.2. So that's why they're included in there. So let's move on. I wanted more from this. That wasn't enough. And what I said was that I knew that the ancients were very, very skilled in mathematics, extraordinarily so. They certainly understood what square roots were. So one of the things I did is I took blessed time at 1335, and I pulled out the square root, which is 36.537, and then because numbers are fungible, you can multiply both sides of the equation by any number you like, as long as you do it to both sides of the equation. And if you simply multiply it by 10, you move the decimal point one place, and what you get from that same number is 365.37 days, which is, of course, our calendar year. I've got a typo in there, do forgive me. But how is it possible that 2,500 years ago, the two numbers that Daniel gave us and wrote down for us gave us the length of a synodic month, which is the most basic measurement of planetary time for our Earth, and 365.37 days, the length of a calendar year, accurate to 2 hours. That's all, 2 hours. Why is that? Well, you can spend a lot of time thinking about that. And one of the things that you can think about is that the lowest common denominator of both markets is 5. And the next thing you can think about is that this entity, the man clothed in linen, who is obviously some supernatural entity, you can call him whatever you like, but if it is one of the angelic host, why is it talking in numbers that are approximate? Why is it creating a number that is 2 hours out in the length of a calendar year? Well, that's a pretty big ask, because until we got electric watches, we didn't actually know how long a calendar year was. We couldn't time it. And not until 1952, when the first atomic clock went in Paris, were we able to actually definitively time a year. So with a 2-hour variation in there, what is that doing? Do archangels talk in approximates? I don't think so. One of the things you can think about is that the Earth is a sphere and it's rotating in a vacuum. It's almost a complete sphere. It's not a perfect sphere. It has little bobbles here and there, as does the moon. And that means that when you look at that grand rotation around the sun, it's always drawn as a perfect eclipse, but it's not. It has little wobbles in it because the Earth is not a perfect sphere. But we actually have a mathematical formula that will measure and tells you that the any cylinder rotating in a vacuum will slow down its rate of speed, and it will slow down its rate of speed at a known percentage every year, in fact every day. So if you think about it hard enough, you'll come to the conclusion that if you take 365.37 days as Danielcode's length of a calendar year, and you start to wind that back through time when the Earth was spinning faster than it is now, and go back and back and back, you will find that that deviance of 2 hours a year gets smaller and smaller and smaller. And if you keep winding it back, eventually you'll come to zero. And that, my friends, is the moment of creation. Okay, enough of the wonderful math, other than to briefly say, if you look at the bottom there, we take the square root of blessed time, 36.537, we multiply it by 10, we get 365.37, and what you do to one side of the equation, you have to do to the other. The other part of it is abominable time. So we have to take the square root of 1290, the time of the abomination, which is 359.16. And if you take one from the other, you get 6.21 days. And that is what we call minor time. And that's what guides all of our trading and analysis. So let's move on, as time is scarce. Let me find my tool again. Here we are. So we can move along. and I hope you enjoyed that. I find it mesmerizing. Let's see the proof of the pudding. This is a chart of gold, COMEX gold. It's back in 2015. This is a chart that I use for tutorials. And we had those basic ratios that you just saw, time ratios, and three of them were 44, 59, and 62 was the number from the rule of eighths. This particular tool has also got a 70 on it. 70 is what we call the heathen number. It's not actually anything heathen about it at all. It was Sir Isaac Newton's favourite number from the Bible, 70, and it is a dominant time cycle in the S&P and silver in particular. But what I've done just to show you the power of this stuff is I've taken this tool that Pete Tillman from Trade Navigator made for me many years ago when he was running the business there, and you can just click it on any part of the chart and it will give you the 44 cycle, which is the time cycle of gold. It appears in other markets as well, of course, and the 59, 62, and the 70. If we simply start by clicking it on the May the 18th high at the start of this, you can see that it gives us the low. It gives us the big momentum low at 44. It gives us the 62 just as a little part of a counter trend, but the 70 is one bar past the high of that first major push up. Now, given that we know that we have 117 daily bars missing, we must by definition have a standard error of 1 in 3. The miracle of it all is we don't. At time we have a standard error of 1. So any time cycle from the Daniel code is valid for plus or minus 1 bar. That's how accurate it is. So that 70 cycle straight away gave us 1 bar past the high of that first move up. And then our next run along gave us the September high. It gave us the final high in late October, early November. And you can see that simply just putting these time cycles on, we can identify every important high and low in this market. So let's do something a bit more complex. Let's have a really tough test of what I'm talking about. Let's take those Daniel code numbers, which are time cycles. Let's slap them straight on the same chart as price ratios. In other words, I've shown you some of the time cycles, lines running up and down the chart. Now let's just take exactly those same ratios, slap them on this chart as price ratios, now running horizontally. Look along the bottom of this chart. You can't quite see it because it's not all there, but there are in fact 3 different contracts from May the 18th all the way through to November of 2015. 3 separate contracts, futures contracts. Have we adjusted for that variance on rollover, premium and discount? No. Just slap them on raw. Use the 057 chart. That's what it does. It just takes the front month. When it becomes the front month, that number goes on the chart. If there's a gap there, up or down, that's fine. It just sits on the chart. But we're using 3 different contracts. In other words, we're taking a measurement from the August low, the low of this chart, all the way up to the May 18th, 2015 high. And they're in different contracts. And the next high is in a different contract again, as are the 2 subsequent highs and the 2 subsequent lows. And what we've done is we've simply taken the time cycles and slapped them on as price, as rough as you could possibly be. Have a look. Every important high and every important low comes exactly at a Daniel code number. By exactly, I mean within 0.1%, not 1%, 1/10 of 1%. Look how perfect that is. Look a bit more about what you can learn for how these markets move. Right here, I'll put the spotlight on it. This little push down here from September the 24th, we have a sell signal right at the top. We get short. There's a little inside bar, and the next bar is a, I wonder if I'll be better with a pointer here. That looks a bit thick, doesn't it? I don't know if this is any good. Let's see if I can get this to work. Okay, so there's your inside bar. Here's your next bar, 2 days after September 24th. It's got in there 2018 as a typo. In fact, it's 2015. I apologize. I do some of this work for you at 3 and 4 o'clock in the morning, so sometimes I haven't had enough coffee to keep it all running together. And look, after the inside bar, look at that next bar. The low of that bar stops at the 50% retracement, 1127.1. The variance between that low and the number is about 2 or 3 ticks. That's the market's way of talking to you, and markets are always talking to you and always have. The problem has been that until we had the Daniel code, we didn't have the language to understand what markets were saying to us, but now we do. That market is saying, I know that number and I'm tracking it. The very next day, we have a small bar down. Here we are. This is it right here. This little one right in here. And what it's doing, it doesn't tell us anything at the low, but the close is almost exactly on 1127.1. The market is saying to you, I know these numbers and I'm tracking them. Then we get a big bar down that doesn't give us any target recognition. That's normal. We only expect target recognition 1 in 3 days, sometimes 1 in 2 days, occasionally 2 or 3 days in succession. But look what happens with the next bar. This has been a high momentum move up and down. Market's roaring. All of a sudden we get a tiny little bar. How does that happen and why? Well, that's there for one reason. The close of that bar is 4 or 5 ticks away from the red line at 11.12.9. 4 or 5 ticks away. That sets up the buy order for the very next bar. I can remember trading this market. Everyone was short. They thought it was going to the middle of the earth. Look what happened. It opened, it dashed down. It was a high momentum move. It hit that Danielcode black line, which was at 1104.2. There was only 2 ticks variance. It stopped like it was shot, literally, turned around, roared up, and you made $2,600 in the next 3 days just for knowing that buy signal was there. Okay, wonderful stuff, isn't it? I hope you think so. One of the other things that's happening at the time, folks, is that these are the 6-day charts, and I'm doing 4 of them. I do oil, S&P, gold, and UST bonds. If you want a deeper and different look into what markets are doing and where they're going to find more important support and resistance, have a look at these charts. That run down, this is a UST bond into its low. There was 5 ticks variance, that's all, from the blue line, which had been on there quite literally since the high back in February 2024. Okay, it had been on there for months and months. The rally back up, which we've just had, found that red line, Daniel code resistance at 117.10. That's one of those retracement lines, exactly what we've been talking about, and stopped completely. Look at the close, right on the 115.10. Target recognition is valid at the bar, high, low, or the close. In this case, T-bonds is just showing off. It's hit the target recognition at the high with 3 ticks variance, and it's closed with, as I recall, 2 ticks variance. Pretty extraordinary stuff, isn't it? This is crude oil. Same thing, 18 tick variance up at the high. Remember, this is a 6-day chart. Every single bar is made up of 6 trading days. 14 ticks variance at the low. Amazing stuff. Look at the next one. This is the S&P. 9 ticks variance at the low. There was 5 ticks variance at the setup high, and look where it's going now. Just running through these numbers on its way up to 52.92 perhaps. If you're interested in these folks, let me know. Send me an email. This is gold. I know a lot of you are very interested in gold. That high came 13 ticks from target, which had been on this chart for many months at least. Then we had a gap down, which is unusual on a 6-day chart. Pretty prominent gap, and what the market's doing now is run straight up into that gap. So presumably it will try to close the gap before anything else. That's what most markets do. If you'd like to receive these 6-day charts, folks, they give you a totally different and deeper understanding of where market moves may terminate and the probabilities of that. Email me and I'll be happy to add you to the list. So, Danielcode trading tutorial, folks, the only way for you to learn this stuff about trading time. We've got some wonderful testimonials here, one from Mark L., who's with us today, and of course from Mr. Palladini, who's also with us today. Give yourself a serious present that will last you all your days. And you can read all of that for yourself. If you're interested in doing a tutorial, email me today, jneedham@thedanielcode.com. And our normal fee is $7,500. We're continuing our special discount of $1,000 if you can start your tutorial before the 19th of May. And this offer is for the first 6 applicants only. Email me now, jneedham@thedanielcode.com, and we can set up a discussion to get you started to learn how to create and trade time signals. That's the big deal. That's where the big money is, and all these folks who've kindly shared with us their experience of their paper trading, they're using Danielcode time signals. Okay. Today, pretty interesting stuff. I'm not going to take too long with it. Some of it's the basic stuff like this, simple TO3 buy signal in crude oil, up it went. Some of it's a bit more complex. Today, as part of your learning of how to trade Danielcode, there's the basic stuff of creating and trading the signals. There's also a whole lot of stuff about trading technique. And today, a lot of these markets were impacted by the same thing. A little pullback with no momentum and then a reversal back onto the trend. And you can see here what's happened. I put a note on saying this is target recognition and correlated sell signal. It was also a TO3 sell signal in gold as well. So that's a valid Danielcode sell signal, and its failure point is 2 ticks above the setup bar. If that failure point is hit within 3 trading days of the trade being elected, it's telling you you're wrong and you need to do something about it. And what you need to do is reverse, get yourself long. We call it flip me. It usually is at the high or low of the setup bar. I've got the arrow here for a more aggressive trade before the bar that fails. You'll see the same thing in different charts here. Gold did exactly the same thing here. It had a TO3 sell signal created from the inside bar. The trade was elected. It went down a little bit, then reversed, and it then shot up, and we had 2 flip me positions, an aggressive one, a tick above the red inside bar, and the other one, the major flip me, a tick above the setup bar. Same thing here, natural gas, TO3 sell signal on that key reversal bar. It fails within 1 day, and you get the sell signals elected. Then it goes and gives you an outside day. When you get an outside bar on the day of a new entry, you must stop and reverse. In other words, this is a flip me that happened in 1 day. It's the same theory entirely. Look at the Russell, same thing here. It hasn't elected the flip me yet. It's elected the aggressive version of it, but not the final version of it. You had a TO3 sell signal, which was elected. Down it went. You got stopped out of that because that was a trade against the apparent trend. And if we're taking a trade against the apparent trend, you tutorial guys will know we're using a tighter stop and a different trading technique. So you got stopped out on that down bar. You made money, which was nice, but it set up two flip me's, an aggressive flip me above yesterday's high and the real flip me above the setup bar high. We had a nice sell in soybeans. Pretty amazing, this stuff. If you look at where these lines ended and their blue line targets, which those blue lines have been on this chart for months and months. Variance, a handful of ticks, if that's all. 2 days down, big days down. First day down incidentally gave you a probable change of trend, which is why we held the position, and we're still short. This is another one of those what's been happening in the other markets. See how commonly these markets are all reacting to this, and what it is basically uncertainty around the US dollar has a whole lot to do with it. But you had a TO3 sell signal, trade was elected, same thing, it was against the apparent trend. You made some money on that trade, but it set up the flip me buy signal 2 ticks above the setup bar, which was elected today. Off it went. This is wheat, same thing. Nice big buy signal up, little short sell signal down. Where I've got the TO3 buy signal on this bar right here, we actually got stopped out in this bar, and then because the outside bar we got long, then short, then we got a buy signal to get long again the next day. So that was a bit of a muddle. We had a nice trade up, another nice trade up, and it finished it up as being more than acceptable. This is UST bonds. There's that exact same pattern. We had target recognition. We had an uptrend. So then we got the inside bar, and when that trade got elected, I put a note on success to use a $386 trailing stop, which got stopped out. You made some money. That market actually went down 437. The trailing stop was $380. Not a big deal, but you made $50, $60 where most traders would have lost money. That's the beauty of the Daniel code. It is foolproof. Once you're in it, it works both ways, up and down. So I'm just putting this on again, folks. We're nearing our end now. We're just going about 4 minutes over time. If you haven't got time to click all these off, just go to the website at www.thedanielcode.com and you will be able to take your time to go through these 4 interviews from Mark L., Scott and Amy, and Justin, the last 2. And I do really urge you folks, listen to them. These are real people living in the present, telling you what they've been able to achieve. And you can do the same thing. It's that simple. If you haven't already, help yourself to a free trial. Just go to the website, click the free trial button. Any problems, contact Terry at support@thedanielcode.com. He'll be happy to help you. Remember that trading, it is very easy to lose your money if you don't know what you're doing. It's also very easy to make a lot of money once you do know what you're doing. So get yourself educated, folks. Best thing you can do is send me an email. I will make you into a super trader. But be cautious. If you don't know what you're doing, don't use real money, because the probability is you're going to lose it. So that's us for today, folks. Akshay liked it. And thank you very much, everyone who's with us. Hope you enjoyed it. I hope you're stunned by it. I hope you take the time to mull that over and understand the power of simple mathematics. And that's all for today, my friends. I look forward to talking to you at our next webinar. But for now, have a pleasant weekend, and bye-bye for now.